Many successful banks in the Ranking Banking study do have that more traditional focus on banking, and those tend to have an extremely strong focus on their customer experience and a very strong culture. They're able to spend that time with their customers and really stay laser focused on what their customers are most interested in. They have great training, and given that their strategy doesn't change week to week or even month to month, they're able to stay really focused in on those customers and maintain that great success. Some of the successful banks in the Ranking Banking study did focus on more of a unique or niche solution. Those came about in various different ways. One common way has to do with pairing that innovative solution that comes across from a customer need paired with that unique idea. They're able to foster that innovative thinking with an entrepreneurial spirit and really create something unique and different in the banking space. Another aspect that can sometimes come up, it has to do with those efficiencies. They're able to take some of those mundane tasks out of their everyday personnel and allow them to focus on their customer instead of those tasks with that technology solution to make things run faster, smoother, and easier. Bank leaders need to keep a number of things in mind when they're considering something new, innovative in that niche space. They need to consider the customer focus and the customer experience, as well as regulatory compliance risks. Those are a couple of the really important items. That customer experience is essential. It's paramount to any new solution. And so you need to make sure that it's very user-friendly, that they understand that, and it's a customer-centric solution. Regulatory compliance risks are essential as well. If you're getting into something new and different, you may not have thought through some of those risks before. And so it's essential that you make sure you fully understand those and maybe even engage a third party as needed to make sure that you don't run into any issues on a regulatory compliance issue. As we start to look at 2022 and those factors that are impacting profitability and performance, compared to the most recent Ranking Banking study, we are seeing some different dynamics. Certainly one of those is the movements in the interest rate environment. Most of that has had a real strong indication of improved profitability for most of the banks, obviously if they have a strong asset and liability management process. Another interesting dynamic has to do with the securities portfolios. Those interest rate changes are having a decrease in the securities portfolios, which is decreasing equity, but for many banks is really not impacting their regulatory capital. The interest rates are also having an impact on the mortgage banking space. That's really significantly cooled over this period of time and has caused some institutions to reduce their investment in the operations of those mortgage banking side of things. Yet some banks are still struggling to ensure they get enough personnel. In 2023, the banking environment will continue to have some unique things hit its way. I do believe that credit quality will become center stage. All banks will be on the CECL model, either adopting in 2023 or having been on it for several years. So I expect we'll have more volatility in the provision as banks try to work through and figure out what sort of model expectations they may have and what those forecasts might be. I think that will be a significant focus for many banks for 2023. I also believe that continued management of that net interest margin will be significant. Those processes in place that help manage that to create the best profitability will come in extremely handy in 2023. I think we also have a regulatory environment that may come with some ESG regulations, maybe some new other regulatory concerns that will come our way, and banks will have to be dynamic to manage through that. So for 2023, I think those banks that are very successful will be able to manage through that credit quality as well as those regulatory concerns throughout their process.